Folks, welcome to hackertrading.com. Today is Monday, June 18th, and we've had a pretty big weekend in Europe. We had the Greek elections, and the pro bailout party, along with a couple of smaller parties, seem to have won the elections there. So we've actually avoided a bullet in terms of where financial markets could have headed over in the near term, at least. This was a big event. This was watched by most of the big players around the world, and Asian markets did well. But this news from Greece seemed to have very little impact on the markets. In fact, Europe closed down today, and we are in the US, we are trading very flat. In fact, you can see that the S&P futures are just up about a quarter, half a point, and the S&P index itself is up about 1 point. So although the outcome of the Greek elections was largely positive, the markets don't seem to be buying it. And one of the few strange things have happened in the market today. The biggest one, I suppose, is the VIX index. You can see the VIX index is down by 2 points today. So that's a drop of about 10%. So it was at over 21 on Friday, and today it's at 19. So we've dropped over 10% in the VIX index. And that's to be expected because the fear level associated with an undesirable outcome from Greece has largely been taken out of the markets. So the VIX has dropped, which is good, and it's down to the 19 level. But there are a couple of other strange things also going on. Bonds were briefly up this morning. In fact, you can see it's up about by 1 cent, which is not a whole lot. But bonds are still at very close to their all-time high level. So it's at 149, and we know that the all-time high for the 30-year bond is at 152. So the bond market is at very elevated levels, and that's always a bad sign in terms of where the stock markets could be headed. But the other strange thing is how the euro is behaving. So we are looking now at the /6E, which is the euro futures, and today it's down about 64 points, or rather 64 pips. And when the news came out yesterday, or started coming out, about the Greek elections, the euro actually went up to close to 1.27, and right now it's back down to about 1.258. So obviously the big players in the market are not buying all the positives that are coming out of the Greek elections. And there's good reason for that, because Spain is back in the crosshairs, and the 10-year bond yield on Spain's bonds have crossed 7% today. That is again a very elevated level. That's a dangerous level. And so there is still a lot of uncertainty in the market. But the VIX has fallen down. It's come down by 2 points. It's come down by 10%. Now, we also have another event coming up in the US in the next couple of days, and that's the FOMC meeting. Now, that's the Federal Reserve, and all the Federal Reserve bankers meet once a month. And what we can expect from that meeting is an extension of the Fed's Operation Twist program. So what that means is we could have a temporary rally. We could have a rally that extends a little bit over the next couple of days. And if we see a rally, then the VIX index is probably going to drop a little bit more. We could probably see a level of about 17, perhaps even 16. And whenever we see a level of VIX that's below 17, that is a low VIX environment. And in a low VIX environment, we can get to strategies that involve buying options. So when you buy options, you could buy put options if you're bearish, you could buy call options if you're bullish on a stock. But in general, what happens is if the VIX level goes up, then the volatility of the market is going up, and your option prices are going to increase. So in a low VIX environment, you want to be a buyer of options, and in a high VIX environment, you could probably look at being a seller of options. So for example, in the last couple of weeks, we saw the VIX hit a high of about 28 points here. And that would have been a good point to perhaps sell some call spreads. And now we see the VIX has come down to about 19. In fact, it just dipped below 19. It's gone down to 18.98. So this is we are entering a low VIX environment again, which is good because now you can put strategies like long straddles. You can put strategies like back spreads. You can also put strategies like put spreads and even perhaps some put options because the prices of these options are very low right now because it's a low VIX environment and the it's a good time to buy options. But I think what we need to do is over the next 2 or 3 days, we should watch the situation, see what comes out of the Federal Open Market Committee, the FOMC meeting, and we probably should be able to see a VIX level of about 16, maybe 15, things like that. So that would be a perfect environment to go in for a long straddle, for example, and some of these other strategies. So that's as far as the markets today. The Greek elections have largely been a non-factor in the markets. In fact, Asian markets opened last night, Sunday night. They opened quite high, and most Asian markets have done well. But European markets and the US markets have largely discounted the Greek elections. So it just tells you that over the long run, these problems in Europe are not going to go away. So what that means as far as the VIX is concerned is even though we are seeing the VIX drop today and perhaps we'll see it drop a couple of more points over the next 2 or 3 days, but you can be rest assured that a level of 15 or 16 on the VIX is not going to be sustained. And pretty soon, you're going to see some bad news come out of Spain or Italy, and you're going to see the VIX levels jump up to 22, 23, 25. And that will make your option prices go much higher, and therefore we need to be ready with strategies which can take advantage of an increasing VIX. So we are entering that situation right now. We are not there quite yet, and we should watch for the rest of this week and see how it goes. So that's it for today. Today is Monday, June 18th, and we'll come back with the market commentary in 2 or 3 days. Thank you.